Good morning. My name is Vladimir Tikhomirov. I'm chief economist at BCS Global Markets, and I'll give you my view on the macro developments in the coming week. The past week has not been much different from the previous weeks. We have seen increased volatility. We have seen growing concerns on the global markets related to the political factor. As US elections approach, there is a lot of uncertainty as to the result of these elections, and even more significantly, to the transfer of power if that happens and Biden wins. So these concerns are not expected to go away in the coming 2 weeks left before the elections. And I think they would eventually weigh heavily on the investor appetite to risky assets, including Russian ones. Over the past week, we have seen also some further deterioration in geopolitical environment around Russia. European Union has introduced its sanctions related to Navalny poisoning case. 6 persons and 1 research institution were put on the sanctions list. This was pretty much expected. No significant impact to the markets and to the market traded entities, although the investment sentiment has definitely worsened. Looking into the coming week or 2 weeks, there are 2 major factors that would determine further developments on the Russian market and would continue to weigh on the ruble dynamics. One is, as I mentioned, the US elections. 2 weeks ahead of elections, it's very hard to say, to expect that the market would have a sustained growth or a significant rise in optimism. People are concerned what the election result would be and how the political situation in the US would work out. And the second factor is the pandemic. We have seen increased number of coronavirus cases around the world, Russia included. The authorities thus far have been making their best not to introduce strict restrictive measures like quarantine we've seen in April, May this year in Russia. However, limitations are growing on business activities, and of course the consumer demand is definitely becoming weaker as people becoming more concerned about the possibility of another quarantine or another slide in the economic output. And that weighs heavily on the economic dynamic generally. We have seen that already in the industrial production data published last week. The September figures have shown a weaker dynamic year on year compared to August. And basically, I expect this trend to continue even more in October, when the weakening of the consumer demand is going to push down output in many sectors of the Russian economy. However, I don't expect to see a big slide compared to what we have seen in the second quarter this year, because, as I mentioned, the reaction of authorities remains very mild thus far. Limitations are being introduced, but no quarantine measures. So a lot of sectors of the economy, including non-food retail and services, still continue to function, although with a limited capacity. And traffic in major shopping centers is coming down as well because of the rising concerns related to COVID situation. So looking at the coming week, basically, we don't expect to see any major breakthroughs, not in the COVID situation, not in the political situation in the US. These factors would continue to limit any optimism on the markets we could see. I believe that investor attitude to risky assets would remain cautious, including the Russian assets, which would mean that the ruble is likely to continue to trade around the current levels, somewhere around 78 rubles to the dollar, perhaps even lower in the range of 79 rubles to the dollar. Earlier, I expected ruble to strengthen to below 77 mark, but it doesn't seem to be the case right now, and I don't think it's going to happen before we would see what happens after the US elections. So the coming 2 weeks would remain volatile, cautious, and basically the weight game would continue. That's all on my side. Thank you.